Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So listen, last week was quite the week. We saw the markets hammering on key resistance. What we're going to do now is talk about the key factors for this week. So let's get right into it. All right, so the first thing we have to look for, folks, is the Jackson Hole Summit here. Now, again, Jerome Powell and all the Fed officials are meeting in Jackson Hole to discuss Federal Reserve policy. And obviously, after last week's PPI data, which showed a spike in producer-side inflation, markets are very on edge for Jerome Powell's speech on Friday. Now, sometimes that can mean that we have a slower early portion of the week as the markets and big investors just look towards that Jackson Hole speech on Friday. Keep in mind, it is late August. Historically, late August tends to be a very light period in the market. Economic news this week, for the most part, a little bit more muted. Again, last week we had PPI and CPI data. This week, it'll be a little bit more muted as we watch retail earnings start to come out. So China stocks report, retail earnings coming out this week. Those will be the key drivers, in my opinion, until we get the Jackson Hole speech from Jerome Powell. Now let's jump into the charts on the S&P and take a look where we are at this point. So first and foremost, you can see this was Friday's action on the S&P 500. It was a down day. We did end near the lows of the day, as you can see here. Early on the night here, or late, I should say on Friday going into the overnight, we did see a push up in the futures, but then early this morning, the market started to roll over. And again, we're still chopping basically where we ended on Friday. So S&P 500 right now is slated to open flattish on the day as the market looks for that next big catalyst. Now, if we go to the daily chart on the S&P, let's take a look here. The S&P 500, this trend line is the most intriguing. We still have the parallel channel here, but I can't help but not say this one is one to watch. This is the October 2023 low on the S&P when we were at 4,100. We then have the big corrective move from last August, about 1 year ago, that big drop. And again, I remember vividly, I don't know how many of you guys were here with me in the game plans, but when I was doing this, I still remember Sunday night, the futures were down as much as 5%. It looked like a crash. The markets opened lower, and then we recovered and just went straight back up. Then obviously we had the breakdown with Liberation Day and the subsequent selling, and then the rebound that we have seen lately. And notice again, the gap up from July 31st on the S&P right to that same trend line. And then we tagged it last Wednesday as well. Friday, again, we saw a little bit of a gap higher and then a sell-off into, again, options X, which was on Friday. So this trend line to me is something that I'm going to be watching. I'll also be keeping an eye on the parallel channel that we were watching last week. But again, to me, this is something that's a very crystal clear trend line, an ascending trend line that so far has proven itself over and over again to mark lows when we were above it and now near-term highs. Now, flipping over to the NASDAQ, let's take a look at the NASDAQ. There's this short-term parallel that seems to be keeping price in check. And we can see again, starting back in May, we went up, we kind of came back, we tagged it again here on the QQQ at around 524. We then tagged the high end of the parallel over and over again. Then the big sell-off here, we had that reversal again, that same one that marked that high on the ascending trend line on the S&P, followed by the jobs report sell-off. We tagged the low, we went right back to the high, and notice again, we're backing off the upper end of the channel. And so listen, in the short term, price is very clearly inside of this parallel. It does mean we could come down to here, but really at this stage of the game as a technician, I'm looking to see if we break to the downside. In other words, the market is still stuck in a parallel uptrend, but if we were to break approximately at 564, which is about $12 to $13 lower on the QQQ from the current levels, that would be the start of something that could become a bigger correction versus just small sell side action like we have seen in the past. All right, the dollar. The dollar continues to be in a subsequent downtrend here. We have kind of tried to put in a little base here over the last, I would say, month or so. One thing that's really interesting to me is take a look at this larger parallel channel, right? So if we take the high from September of 2022 to the highs from this year in January, and we drag a parallel trend line down, notice how the lows from January 2023, July 2023, as well as June 2025 all align. And what this tells us, folks, is that the high from 2022 was really your highest point. And since then, even though the dollar's had some major rallies to the upside, it has been in a downtrend. Very little argument can be made against the downtrend here since 2022. Now, for me, the biggest concern would be something like the euro chart here. The euro, again, the euro against the US dollar, which, again, if we zoom out on the weekly chart, we can very clearly see here you have a downtrend basically starting in '08 with the financial crisis where the euro was weakening against the dollar. And again, a lot of things have been made here about de-dollarization. Is the dollar slowly losing its reserve currency? The answer, based on the chart I'm looking at here, and I'll show it again in just one second, is yes, it is. But it's a very slow process, meaning that it's not something that you're going to see happen overnight or even over the course of a year or two. When a reserve currency loses that status, it literally can take fully decades to happen before it loses that point, right? And so again, if we go back to this Euro USD chart, you can see the downtrend from 2008 with the euro losing against the dollar. Look at what has happened recently. We've had a breakout on the Euro USD, which again means a change in trend. And so essentially, it doesn't mean, by the way, the euro is going to go straight up against the dollar. But what it tells us is that you have now generally changed the direction that the euro will go against the dollar. The dollar, again, will weaken over time against the euro. And by the way, the JPY USD is much the same here. Let me take a look here. Let me take a look at the USD. Let me see here. USD. And again, I'm just bringing that up. There we go. We'll take a look here. All right. So Japanese yen against the dollar. Here we can look at this chart. And essentially, you have the same sort of thing where you've had a downtrend on this from the Japanese yen USD. And again, you've now bottomed out and they're starting to look like you're heading a little bit higher. So, anyways, we'll keep an eye on this. The Japanese yen chart is a little bit trickier versus the euro is a very simple chart. And obviously, we know that Japan has many more issues here with what has gone on over the history over the last 20, 30 years with the Japanese yen against the US dollar and the contango, or I should say the carry trade. Okay, so let's get into a couple other things here. The 10-year yield is an important one for us to always be looking at because of the Federal Reserve. The bear flag is still fully intact. As long as we do not see the 10-year yield climb back above 4.37 and confirm, then you would look at this chart as being a negative and something that would likely see a rollover to the downside. All right, so again, looking for this to eventually see lower yields based on this chart. All right, so next we want to move into the action here on stocks. So again, we're going to look at the bigger movers on the stock market and what is in play. All right, so let's flip over to Novo Nordisk. Novo Nordisk today is getting headlines after Wegovy, their key weight loss drug, was approved for another use case. And that stock, again, is trading up. It's not much, though. In terms of tradable, and we can look at the pre-market here, you can see here we had on Friday when that news broke, it had a big push up. Then it kind of came in the pre-market, and it is trending up just a little bit. But overall, I don't look at this as a tradable opportunity. For the most part, we're seeing here a little bit of an upside move. There's a gap fill and a high pivot. In terms of shortable levels, the only level I would probably look to short today for a day trade only would be 57.20, the former pivot low right here. Now, listen, this NVO chart has been beaten down, which is one of the reasons why I'm so hesitant to go short on it. And it would strictly only be a quick day trade should it get up to this level, because ultimately I think it could go up and maybe even fill the gap around 70. Now, some people would say, well, why wouldn't we go long if it could go up that high? Because the key word is could. And could means 50-50 chance, basically a gamble. For me, the only way I'm taking a trade on the long or short side is if I see probabilities north of 75%. Then it's worth it to me. Then the ball is in my court. I have control. If I take, let's say, 7 or 8 or 10 trades, I'm going to win a majority of those and come out ahead. Anything that's 50-50, not good enough for me. But again, for a quick trade on the short side for a day trade, 57.25, the odds, if it pushes up intraday to that level, should be pretty solid. Now, taking a look at Nvidia here, this one is catching my eye. It's not moving a lot pre-market, but the reason why is because on Friday, we did see a break of this upsloping trend line. Now, this trend line is powerful on Nvidia for a few reasons. Number one, it goes all the way back to the April 7th lows, which was the low on the stock market before the major rally that we have seen. All right. And the mere fact that it's hit this line multiple times on this, again, ascending trend line and hadn't broke made me very aware that it was in an uptrend. But once it breaks, the floodgates could start to open. Now, again, one of the things I look for is when it breaks, I don't just say, oh, it closed below, let me go short, or let me look for a big collapse. I want to see confirmation. The confirmation signal confirms a breakdown versus the speculation that it could just be a whip because of Friday's options expiration. All right. Now, again, Friday options expiration or any shenanigans by institutions, they do this all the time. They make it look like it's breaking out or breaking down, and then they whip it the other way. So once you see confirmation, it really solidifies, in my opinion, that it's likely a real breakdown. We do not have that yet. So I will be watching for it. For it to confirm today, we would have to have a close below 178. So I'll keep you guys posted in these game plans. But suffice it to say that you can argue that Nvidia has been the stock market up until this point, and now it could be cracking, but let's watch and see. Now, taking a look at Microsoft, beautiful high pivot up here. Again, reversal on earnings. That was a nasty reversal candle. These type of setups oftentimes mark tops. In addition, take a look at this trend line, which it has now broken. So again, I would speculate you could be having a multi-year cycle high on Microsoft in place now. So number one, you've broken this trend line. Same thing, you have not confirmed yet. I'm keeping my eyes open to see if we confirm. But again, this trend line again kept hammering, and has now broken. Let's see if it confirms. If it confirms, we should be headed lower. And even bounces will come, as we know. But ultimately, again, the downside should continue. The other thing to kind of keep in mind, and I did a video on my YouTube this weekend on Microsoft, is that if you compare the run we have seen on Microsoft this cycle, okay, which really, again, arguably began in 2016, right? This is where the uptrend really started to gain momentum. It was a 9-year upcycle, right? Or 9-year bull market in Microsoft. And what I did over the weekend was I did some deep dive into how long the bull market move was in the .com era. And interestingly enough, if we look at this, guys. The uptrend in Microsoft began in 1991 and concluded in the year 2000. How many years of upside was that? 9 years. And so again, when we talk about cycle highs, you just don't want to say, oh, well, that candle on the daily chart looks like a cycle high. No, listen, that doesn't mean anything for a cycle high. Remember, cycle highs are literally probably 5 to 10 year potential highs, or at least 4-year highs for a cycle. And so you look back at these past cycles where you had these other explosive moves and you say, okay, well, how long was this cycle? And interestingly enough, the .com rally that Microsoft experienced was 9 years. And lo and behold, we are at the 9-year point of this expansionary period in Microsoft. So again, listen, it doesn't mean Microsoft collapses out of the gates. If you go back to the dot-com era, you can see it had this big fall and then it had this monster bounce back up on the monthly chart, right? It almost went back to all-time highs. Then it had a big drop with a bounce, big drop, bounce, et cetera, right? So the idea is it ultimately puts in a major high and eventually comes down. But again, there's no guarantees that it's not going to have big bounces along the way. But very interesting little aspect there on the chart of Microsoft. Now, we got to talk about Tesla. Tesla had a breakout here, right, above a wedge. But this is what you have to monitor. Ask yourself, did this breakout ever confirm? Did it confirm that it was a real breakout versus a potential fake out? And the answer is it didn't. It never confirmed. To confirm, you would have had a daily close above basically 346.40. And notice you pierced it and look, it got rejected and came back. Now listen, it's still holding this trend line here at around 330. So that's okay because it means that as long as it stays above that, it could still technically confirm. But if you break back inside of this wedge pattern, then that whole breakout goes right away, and the odds start to favor a move down to the lower end of the wedge pattern here at 306. And so these type of things we got to really monitor, guys, overall, because again, this is why I monitor the confirmation signal, because if this had confirmed, I have little doubt this was heading up to around 370 at minimum. But the lack of confirmation kept me very skeptical on this. And so far, that's been the right way to be because, again, price has come right back in. Now, we got to turn our attention to Bitcoin, guys. Bitcoin, another down day today, trading just above 115,000, marking up the chart. We obviously have a double top. I explained over the weekend in a specific deep dive video on my YouTube about this Bitcoin chart, how, again, you had your topping tail. It technically negated the topping tail, but then the reversal candle really solidified a double top right here and a nasty reversal candle, which has followed up with selling pressure. But this is the trend line you want to be following. All right, put a trend line in right here. All right, this is a big deal today, folks. So a trend line that goes back to the April lows, which, by the way, that was the Liberation Day sell-off in the equity markets. This trend line is at risk of breaking. That is something that if you were a bull, you do not want to see. Now, same thing applies as on the other charts we were just looking at. If it closes below, okay, that's not good for bulls, but without confirmation, it doesn't mean it's a true breakdown. You need to see a confirming breakdown here. Confirmation signal must trigger. If it does trigger, I would dare say you may have a lot more downside. Now, listen, you'll have support right here at 112,000. There's no doubt. That's a previous pivot low. It was also this pivot high going back to May. But if you really are breaking an uptrend line like this, just like we were talking about with Nvidia, this is more problematic for upside. This now breaks a trend in Bitcoin that's lasted since April, and we actually could see a move down. I would dare say potentially all the way down to around the $100,000 level or even a little bit below. So we'll watch very closely. Of course, in these My Trading Game Plans, I will always be giving you guys daily updates on Bitcoin. Now let's look at Ethereum. What's Ethereum doing? It got close to this all-time high. It was not able to make it, and it has pulled back. First major support is going to be at 4,065 to 75. Previous major high, which was also a major high here. You broke out, you confirmed, you continued. Now this becomes major support. So you should see some sort of support around 4,000. And then the big question is, does it bounce back and head back to the 4,800 possible all-time high, maybe touching 5,000, or does it bounce and then come back in and break down? But at least we know where the major support will be. And again, that's around 4,075. Let's take a look at gold here, guys. The gold chart continues to look muted. Again, it is in weak position because it still hasn't been able to break out of this downsloping descending trend line and this ascending trend line area up here around 4,020 or so, or 3,420. In addition, you do have support though at 3,270. Very small price action over the last week or so in gold. Again, any sort of sideways chop after a big red candle is usually slightly negative. I would still have a slight near-term negative bias on gold, although again, my long-term flag pattern here is still fully intact. Next up, let's look at silver. Silver's been kind of in no man's land. And the reason I say no man's land is just simply because we're not at support, we're not at resistance, right? Here's your resistance trend line up here. And then if we flip it around, where would support be? It would be down here, which was a previous major breakout move, right? So again, support around the 34.65, resistance remains around 39.75, and it just is chopping. And when something's chopping, you could have a belief, a gut feeling that it's going to go one way. That's fine. But the chart to me has to tell me. And right now, it's not giving me a good directional signal one way or another. All right. And again, just looking here real quick at this chart of the U.S. oil. Oil continues to sell off. I've been bearish on oil here, especially once we saw this bear flag. We got the breakdown. And I did say that it's likely headed to $60.65. Key gap fill and overall pivot area right there at that 60-65 level. So that should be the first area where bulls may try to come in and bounce this thing, but I still think it gets there this week, actually. All right, lastly, natural gas, guys. Nat gas, you can see it broke down, retraced into the key former support, now resistance, and it's down a little bit. It technically never confirmed below the key yellow trend line here, this horizontal trend line. And so it's really only still minor resistance here at $3 versus major if we had confirmed below. I am still sitting on the sidelines, but I still would be interested if it sells off into $2.63 for a potential swing trade long. All right. So again, guys, literally some interesting action with Jackson Hole this week and all of these other things. All right. When all is said and done, we had inflation data last week where early in the week CPI made us think, oh, inflation's no big deal. And then PPI data 2 days later shocked the markets and said, wait a minute, maybe we are seeing some inflation starting from tariffs on the consumer, on the producer side. Now, again, the key this week is obviously retail earnings from Walmart and some of these other players. But more importantly, what does Jerome Powell say? How does he guide the market? Markets have been going back and forth the last few days about, is it going to be 3 rate cuts this year? Is it going to be 2? All right. After the PPI, it went to 2 from 3. Now I saw over the weekend and going into this week, it's back to just favoring slightly 3 rate cuts into year end. So again, these are things that the market will be queuing off of because, as we know, markets and investors want cheap money, but they want cheap money because the Fed is lowering it because the economy is doing okay, not because the economy is collapsing. And that's something else that as we get to the end of August, we have to start looking at the jobs report. That jobs report could be the most important jobs report after the last jobs report where we saw those epic revisions and the weak data. Again, that combined with inflation is now the framework for whether or not this market and this bull market can continue higher. Thank you, as always, for tuning in, guys. I appreciate each and every one of you. I will, again, bring my A game every single day. You guys show up. I'll give you guys the best I can. Thank you so much. Have a good one. Take